Hi, welcome to the Market Alert for Monday the 29th of February 2016. So one extra day in February before what I believe is the carnage to start in March of 2016. Next month I'm expecting to see a big decline in the market. I can't see anything else, and in particularly as this last weekend we had the G20 meeting, and it was a big disappointment. They can't agree on anything. They have no solutions for anything apart from removing cash out of society, removing the $100 bill, the 500 euro. That's the thin end of the wedge to a cashless society. And if you don't believe me, just do the research. And that way they can go negative. And then if there's a problem with the banks, you can't take your money out because it's all electronic as well. And it's not just me saying that. There's plenty of information, including Andrew Haldane of the Bank of England has also proposed this, as well as Larry Summers and Draghi with the removal of the 500 euro note, citing that spurious and red herring as usual that terrorists and drug dealers are they've got control of all of this cash using these notes. I mean, it's absolute nonsense. But that again is to frighten the populace into believing that the bogeyman does exist, and thereby removing the cash so they can do whatever they want with the monetary system, and you can do absolutely sod all about it. Anyway, that aside, that is something you want to keep an eye out on though. Like I say, it's starting to creep into the mainstream. This has been going on for some time, but yeah, it's going to be very interesting throughout March, and the market sort of reflected this in Friday session. Really, the market's weaker because the G20 meeting started then, and there was a bit of indecision. Then they can't really work out why there's a problem globally when they are the cause of the problem. So this puts some weakness into the market. You can see the market moving lower, the first signal appearing just after 3 p.m. there, the market moving lower, trading down to the 16,700 level. This signal is invalid because this one's in progress when this one appears, trading down to the psychological level there. Market then reversing back to the upside. Again, are only the 20 points. You can see how these lines became resistance and support, and then the same here, just down. It did actually break this line, and again, if you've trailed the stop on this one, as it broke through and left the lower high, you can see there it still came back to the psychological line there. The market was already quiet before going into the quiet session, and had also generated profits as well. As I say, the rule is that you trade the quiet time, which hasn't been that quiet of late, which is why it's displayed on the chart, the grey shaded area there, if you haven't made any profits in the first part of the session. So you generally wouldn't trade the grey area, the quiet part of the trading session, if you've already made profits in the first part of it. And I've always said, if you've made decent profits in the first half of the session, then call it a day anyway. You don't want to be sitting at the screen. But if you have losses, like we did on Wednesday of last week, 4 losses, consecutive losses, then you want to trade through to actually recoup those, which we did on Wednesday. But in Friday session, there was no need to trade any further. But there was another 20 points here, and then there was a loss on this one of 32 points, and then the market obviously giving the 20 points on the first trade, another 20 points on the second one before the end of the session. So a very good day on Friday, plenty of profits around, and just the right amount of momentum and also volatility there. So we can see the markets are off. This is a combination of the G20, and it's interesting how the mainstream business press and also some of the Fed members are not including China now in their analysis. And it's oh no, it's just the oil market now. No, it's the oil. No, China doesn't matter. It's oil. And they vacillate between China and oil and whatever for moving stocks higher. It's absolute nonsense. Absolute nonsense. They're just clutching at straws to justify why they're getting the moves in the market. We have this massive move in the Dow here. I mean, if you just get the measurement tool and we go from the low up to this high, Over the last week and a half, we've seen a 1,300 point rise, 13,500 point rise in the Dow, and there's absolutely no way this is new buying of stocks. As you've seen on a daily basis, around 3 p.m. New York time, the market's been ramped higher, apart from Friday. I don't know why, but they didn't do that on Friday. The market's come off and now it's lower. So again, you know, it's all talking heads and absolute nonsense that you get in the mainstream business media. If you want to know what's really going on, I have not heard any of them mention yet about the move towards the cashless society. I know it has been mentioned that the €500 note is being taken out of circulation, again citing that false argument that it's because of terrorism and all the rest of it. Absolute nonsense. But other than that, it's very interesting how they're actually saying, well, you know, well, it's the price of crude, and you know, there's to be a deal done with OPEC, and oh, that's what's giving the market buoyancy. It's not. It's the plunge protection team to bring the markets back up, and that's why they did it from this level here, because had the market have taken out 15,572, then we would have been trading down to the August lows, which you'll see there at 15,254. So that was the reason behind it, bringing the market back up. But of course it's run out of steam now, and they're at a loss of what to do following the G20 meeting at the weekend. In today's news, what have we got? Are they wheeling out any Fed members today? Not today. 3 p.m. we have the pending home sales. That's the one that's going to occur during the trading session, and this is going to show that there's an increase. I'm not surprised at this, because the 100% mortgages are back in the US and also in the UK as well, and that's always a sign of a market topping things as well. They said they would never allow it again in 2008, but sure enough it's come back, because people have short memories and most people didn't know what went on in 2008 either. And if you do want to know what went on and the corruption and manipulation, then have a look at the film The Big Short. I saw this over the weekend, and it was quite revealing, actually. Well, very revealing. And it was you know, the corruption that I talk about and manipulation in the markets now was actually shown to be the case in 2008, and it is just absolutely brilliant to see how they manipulated the mortgage markets and the bonds to actually, this is Goldman and Co, who sold them off to everybody else, who made an absolute fortune from it. And then Paulson, of course, who was head of Goldman Sachs at the time, left just before the whole thing collapsed, got a job with Bush, a bonus of 350 million tax-free, and then held his hands up. Well, I don't know what happened, Mr. Bush, but I do know the solution. If you can get the Fed to print lots of money and bail the banks out, then it won't be a problem. Of course, it was more detailed than that, but if you have got an hour or two spare, then I highly recommend that you have a look at it. On the implied volatility, this down 17.15, and moving lower again on Friday, but this is likely to move higher today. We may have found a bottom in this, and that's fine by me. This is actually seeing a very good pullback in this if the market does want to move lower now and move up to around the 34 area when we get the next move to the downside there. Just on another note, the Shanghai market down 3.5% in this morning's trade over in the Far East, well, afternoon now. So again, this starting to move back to the downside once more, back to those lows that we saw in January. So again, all the money that they pumped into the market last week, 350 billion, hasn't worked. It will never work. No government is bigger than the market or the crowds once they start to panic and leave. So it's time they learnt that lesson, frankly, but you know, that everything's too big to fail these days. Right, that's it for today. I will see you in tomorrow's edition. As ever, thanks for your support and also for watching. See you in the next one.